Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from Charts.Markets.com runs down the major markets. He tells us they were on a roller coaster this past week. Gold was relatively quiet. He checks out crude and the U.S. and Canadian dollars. Longtime BC trader Victor Adair checks in from Vancouver Island to talk about the volatility we've seen the last couple of weeks and what's behind it. He also has some tips on how to keep your money when other people are losing theirs. Founder of Armstrong Economics, Martin Armstrong, digs deep into the latest bounces in the stock markets. He talks about what really drives the price of gold and the possibility of major social unrest. We'll talk to Ross Clark right after this.
Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclicode.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from Charts.Markets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on X at Charts by Ross. Welcome back to This Week in Money.
Good to be with you, Jim.
Ross, how would you describe what happened on the stock markets this past week?
Well, if you weren't around during the week and all you did was look at Friday to Friday, a week apart, it wasn't much, but if you lived through Monday, Tuesday, and right to the end, this was a real roller coaster. You had, the Japanese announcement at the end of the preceding week regarding the quarter point move in interest rates. So everybody with the carry trades that was leveraged ended up having to go sell off some of their equity positions. And everybody's talked about that one the early part of the week. But by the end of the week, things bouncing back pretty well. When we look at our 17-year cycle and our long-term channels, the break into Monday got very close to some initial targets. And on the week, we have on the weekly charts on the NASDAQ and on the S&P, we have an oversold reading that we call a springboard. We haven't seen one of these since 2022, so good oversold reading. And at least on the very short term, look for a Fibonacci retracement rally, a 61.8% rally. Off of the Tuesday low. So that would put the S&P target somewhere up around 54.60. And for short-term traders, if they got their feet wet early in the week, you might be looking to take some money off the table on that kind of a retracement rally.
What's going on with gold?
Gold, it actually was a pretty quiet week overall. We closed off the week at 24.30 on the cash price, so holding relative to where it was a week ago. We did get down to 2,400 on that sort of panic selling that was happening everywhere on Monday, but gold bounced back reasonably well. The commitment of traders numbers we keep an eye on, those were very high 2 weeks ago. They've eased back a little bit now. That was putting a little bit of a damper in terms of the potential for a breakout. The other thing that we look at always when it comes to gold is the U.S. dollar. And the dollar index, that's the short-term cycle, is due to bottom at the end of the month. We've got about 3 more weeks left here for the dollar index, and we would hope that you'd see more buoyancy in gold as the dollar goes down to create some kind of an interim low. Ideal target date would be around the 28th.
What's happening with crude?
There's another one that had early sell-off, and we had a new low for the week. I think it was a 4-week low, down to the point where in a seasonal we're still in a downtrend. So the bounce back at the end of the week back to $77 still looks like a downtrend. Commitment of traders numbers don't give us anything in the way of guidance at this point. So, just treat that one as a trading range. I don't think there's anything to jump on board to take advantage of with those ones.
Ross, what's going on with the U.S. dollar?
Well, the early part of the week got hammered with everything else, got down to 102.25, bounced back just over 103 at the end. But as I say, the cycle work there would suggest that we've got another couple of weeks here of heaviness as far as the dollar index is concerned. Could easily get down and test that 101 level that we saw at the beginning of the year. Wouldn't be a total surprise to see that. What's
going on with the Canuck buck?
And the Canadian dollar, now here's an interesting one. We've been talking the last number of weeks about the commitment of traders numbers and how we've been not multi-year but multi-decade lows as far as the positions are concerned, for the commercials. They are very net long, and the speculators are very, very net short. And this week, we saw an outside reversal as far as the currency was concerned, to the upside. And there was a small downtick in the commitment of traders numbers reported on Friday. So the chances of a pretty good bounce in the Canadian dollar, I think, becomes a very tradable position here for the next couple of weeks.
What's going on in the uranium market?
Well, uranium has just been clobbered the last 6 months or so. It had, it was one of the fabulous runs from 2021 up until the early part of this year. We got a lot of upside exhaustions, a bit of a rolling top, not just in the uranium price, but also in the big name stocks. Now, as of this week, the uranium price itself, we're sitting at around 81.5 on the futures contract. This is up from $20 just 4 or 5 years ago. It's now come back down to its 50-week moving average. We've got some sequential signals in here on the weekly chart. I haven't seen one of those since back in 2020 when we were at $30. So that's looking like the uranium might be trying to establish a decent base at this level up around 81. And on looking at the stocks, we've got some good signals in there on the weekly charts, getting oversold readings that should present some opportunities. Cameco, Denison, Paladin, NextGen, all good oversold readings within what are still dominant uptrends going back over the last year or two. And the URA ETF might be a nice way to take a position as far as that sector is concerned.
Ross, thank you so much for chatting with us.
Always a pleasure, Jim.
My guest has been Ross Clark from ChartsandMarkets.com. Find him on X at Charts by Ross. Coming up, Victor Adair next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Victor Adair, retired recently from nearly 50 years of being in the brokerage business in BC, but he's still very active in the markets. He's speaking to us from Parksville on Vancouver Island. Welcome back to This Week in Money.
Thanks, Jim. Always a pleasure to talk with you.
Victor, before we discuss individual markets, what's your big picture view on the wild volatility we've had over the past couple of weeks?
Well, I guess I should start with how much time have we got. Yeah, it was pretty wild. I've been, I guess to some degree, been expecting something to happen. And here's a couple of things. I mean, I pay a lot of attention to a variety of different markets, kind of looking at them for correlations and that sort of thing. But I think at the most basic level, with the trading that I do for my own account, and I don't manage anybody else's money, I just have a long history, I guess, a character flaw perhaps, of trying to think, okay, what could go wrong here? Or how could things change? And for instance, my favorite barometer of what I would call risk sentiment is the S&P 500 futures contract. I think that is like the center of the universe. Perhaps in the vying for that spot might be the 10-year Treasury note, but the S&P is pretty important. And one of the things, sort of a subset of that I look at, is the volatility then of the benchmarks, like the S&P 500. And that's what really, really happened here, certainly on Monday of this week, where volatility just shot up like crazy. Now, we had a number of things that triggered the big changes, but you kind of have to start with where were we before things started to go haywire. And where we were was, I'd go back to July the 11th. The United States reported their CPI data that day. The Nikkei index in Japan hit an all-time record high, and the NASDAQ hit an all-time record high, and the Japanese yen hit a 35-year low at that point. And then, just as quick as you could snap your fingers, things changed. Now, the Bank of Japan came in to try to support the Japanese yen. They had been in back in April, and it looked like their intervention didn't work. But this time, their timing was perfect because the U.S. dollar, as it were, was already starting to back off a bit against other currencies on the softer CPI. Anyway, the yen started to run to the upside, and one of the reasons that's important is because the yen has been the source of a lot of speculative funding where people could borrow really cheaply in the yen, practically at zero, and then reinvest the money someplace else. For those of your listeners who've been reading my weekly blog, they'll know that I've talked a lot over the past several months about this fantastic trade that happened where you could borrow Japanese yen and put your money into Mexico. So you borrow at zero basically in Japan, and you can buy the equivalent of 3-month Treasury bills in Mexico with an 11% yield. Now, the hedge funds that did that kind of trade were able to use leverage on that, and then over the past 4 years, that the relationship between the yen and the Mexican peso has done nothing but go in Mexico's favor. So the hedge funds that did that trade, made a fortune. And when people are doing something and it's working really well, they just kind of have a temptation to do more, It's like any guy, he's bought some stock and it's going up and he can't, he just has to tell everybody about it, and, and then you get to a tipping point. And I think we had kind of a tipping point here this week. It's also August, and August is notoriously thin, and I guess, Timmy, we could also say, there's a lot of correlation between different markets, and that's one of the fundamentals, I guess, of how I trade, when I'm always looking at how markets are doing relative to one another. Now, I guess to cut to the chase, we had kind of a scary experience. The Japanese stock market, the Nikkei index in particular, fell about 30%, and 20%, that was in 2 days. It was Monday of this week was the worst down day in Japan, in the Japanese stock market since 1987 crash. So there's some drama. And, somewhere we'll read about it at some point. Somebody got some margin calls that, they had to struggle to meet and probably didn't meet, and so there was forced selling by people that had lent them money. So it was a pretty dramatic week, but we hit the lows on Monday. And as the week went along, in very choppy trading, by the way, but as the week went along, we rose. So I'm kind of thinking the worst of the panic is over, but I think the net from this will be a lot of people got stung, or at least were reminded, it's a two-way street out there. And I think the buying that we've seen that has driven risk assets up earlier this year is probably going to be a little less aggressive as we go forward.
In your trading desk notes at Adair.Ca, you've been writing about mean reversion and key turn dates over the past 4 weeks. What do you mean by that, and why is it important?
I have been, and so mean reversion, and this is for the mathematicians out there, they're going to puke when they hear me say this, but just to make it simple, when something runs a long way in one direction, the chances of it turning and going the other way seem to increase. And that's, I think, really what mean reversion is. If something gets too expensive, maybe in plain language, people either can't afford to buy it anymore, or they look for something else to, substitution, and the price of the thing that was running up like crazy turns. So you have this revert to the mean. Let's say over the last 15 years, it's traded around one level, and then it shoots up. Then it's kind of got a magnet to kind of come back to that average level or that mean level that it's been on for the past 15 years. Key turn dates, that's my own expression, but here's what it really means in the simplest way. As I said earlier, I look at a lot of different markets, and I have this basic view that all of the markets are correlated with one another to some degree. And I think I've used this expression with you before on the show, but I would picture a guy in the soybean pit, for instance, years ago when we used to have all the trading floors, and he's going to be trading soybeans going like crazy, but he's also going to be turning around and looking over his shoulder up at the wall to see what the price of gold is, to see what's going on in the currency markets, what's going on in interest rates, how's the stock market doing, that sort of thing, because he knows that if something starts to happen in one market, it's going to feed through in some way into the market that he's trading, so he has to be aware of that stuff. Now, he may know the nitty-gritty of what's going on in the soybeans and just kind of the big picture of the other markets, but, it's still a recognition that the markets are interrelated, and you cannot, I think I've also said this to you before. I interviewed Jimmy Rogers, it might even be 20 years ago. And he said to me, Victor, how can you trade wheat in Chicago if you don't know the price of iron ore in China? And I think that really is a great way of understanding a key turn date is when a number of markets all change direction on or around the same time. That signals to me something big has happened, and I better be paying attention.
Why has the yen been so important?
Well, in a word, the carry trade. And the carry trade, as we tried to explain earlier, you borrow in one currency and you lend in another, and, you sort of make the difference. The yen reached all-time highs in the very end of 2011. And since then, to where it was here last month, it fell by about 50%. And as it was going down, by the way, it kind of pulled all of the Asian currencies down with it because other countries that were exporting to, let's say, America and Europe and so on, would no longer be competitive if their currency stayed high. Well, the yen was going down. So the whole Asian block of currencies over the last dozen years has been trending lower against particularly the U.S. dollar. So it's important at that level as to what's going on with the yen. So the carry trade and actual commerce where people are shipping stuff across the ocean. Now, it's also important because, as I said earlier, like the hedge fund guys would be using leverage. So the yen going down for 12 years, you kind of get used to the fact it's going down. So if you can borrow it, and then you have to, repay your loan sometime later at a lower price, you want to do that all day. And when you want to do something all day, you might as well use some leverage. So there was a lot of that. There's been a lot of speculation I've seen over the past few days as to how big the carry trade was. And, I think some of the low numbers are $1 trillion. It's been a massive trade, and that seems to have changed. And I think the change in the yen from being something that's always been falling to now it's had a bit of a pop-up, it's had a bit of a mean reversion, reflects the change that's happened in risk all across the markets. So, yeah, I kind of think the yen was sort of the epicenter. Now, that reminds me of one other thing here. One of my long-time currency rules, or at least observations, is this. And I've traded currencies for, I guess it's more than 45 years. A currency that's trending, the trend usually goes further than seems to make any sense to you. And then it turns on a dime and goes the other way. And the fact that it turned on a dime and went the other way sort of underlines the fact that it had just gone way too far in the first place. And I have seen that kind of a pattern play out in different currencies over the past 40-some years so many times. And you look at currency charts, and there's so many times when it's just a V-shaped turn, either, down and back up or vice versa. But they just kind of turn on a dime and go the other way. So anyway, that's part of the reason, I think, why the yen has been so important. It's just been kind of the trigger for a lot of the volatility that we've had.
You've been writing about the massive short speculative position on the Canadian dollar. What are your expectations?
I have been. The Canadian dollar, let's say, hit its recent high back around Christmas time and trended lower. And then beginning in March, speculative positioning in the Canadian dollar started to rise. And there's data released once a week, Tuesday of every week. They sort of do their counting and then tell you what they discovered come Friday. And we can see basically what the speculators are. And they don't obviously tell you the names of the people who have these positions, but net, the speculators in the currency futures market have been building a short position in the Canadian dollar, and it is the largest it's ever been. Now, what do they think? I don't know. It could be any number of things. One of the things certainly that sticks out like a sore thumb to me is that Canadian interest rates are lower than American interest rates. And that is unusual in my 45 years of trading currencies. Usually, the Canadian dollar is at a premium, because if it's not, then it goes lower. Because, why would you park your money in Canadian dollars if you could park it in U.S. dollars and get more interest, as it were? That's one of the things. But what is useful for me as a trader, I see that it's massively short, and the Canadian dollar on Monday of this week, when sort of the panic was out there, hit the lowest it's been since in 2 years, and was nearly a 4-year low going back to the COVID crisis we had in March of 2020. And then the Canadian dollar has actually risen about a cent from those Monday lows. On the chart, that looks like a weekly key reversal to the upside. But what really interests me here, and by the way, I'm long the Canadian dollar, so I'm talking my book. The fact that it's turned, it got some bad news, printed a low, and now it's turned and closed higher than it did close last week. People that are short the Canadian dollar might start to go, how about that? Maybe it's not such a good idea to be short. There was some bad news, and the Canada didn't fall. In fact, it went higher. Maybe I call my broker and tell him to buy back that short position. Well, if that starts to happen, there's a lot that needs to be bought back relative to the size of the market, so we could have a little pop to the upside in the Canadian dollar, like we had in the yen. When the yen made its lows, there was a huge speculative short position that had been building and building, over the years, but still, even over the last several months, the short position was probably as big as it had ever been. And when the yen started to rise, it went up quickly. The yen rose about 14% in about a month. And you can imagine, let's just play. If the Canadian dollar went up 14% from here, I don't know, where would we be? 90 cents or something like that? So I'm intrigued by this big short position for two reasons. Kind of, why are they short? And what will happen if they're wrong?
As recently as May, people talked about the Fed saying higher for longer. Now the market is pricing several cuts from the Fed before the end of the year. What do you think?
Well, that part of that is the change, I guess, since July, or even before that, May, where the market started to move to not higher for longer anymore. Maybe be some softening, and we've had some economic data that pointed to maybe the economy is not as strong as we think, and maybe with the interest rates. Short rates at 5.25% and inflation coming down, then real interest rates are going up because real interest rates are the difference between the nominal rate and the inflation rate. So there was some thought that we might start to see the Fed back off from staying higher for longer. And then the panic hit. And, when I say the panic hit, or the beginnings of the panic were just about a month ago and accelerated into this week. I guess that Monday of this week, the market was pricing in as much as or more than 1 full percentage point of interest rate cuts by the Fed before year end. So, again, the credit markets also reacted to the violence, as it were, that was going on in the stock market and the currency markets. And when there's that kind of fear in the market, having your money invested in American government securities looks good. Whether or not you're a perennial bull about the value of American bonds, when the going gets scary, the capital will flow, and it went into the credit markets. As the week's gone along here, that's backed off a bit, but still, I think the market's pricing in a good 25 basis point cuts, maybe 4 before the end of the year, and I don't know whether or not that will happen. It may be that we just got too afraid too quickly and things settle down. But anyway, that is how it is priced now.
Is gold still in a bull run?
Well, I'll tell you what, that's a bit tricky. Gold's had quite a run, and I've traded gold since before I became a futures broker. I started trading gold in the early 70s, so 50 years ago. And I've been on both sides of the market and that sort of thing. Gold, on the weekly close last week, we had an all-time high close on the COMEX market. So you'd say, yep, looks like it's still in a bull market. That I guess would be my first reply. But I am a little suspicious here, and I've been writing in my blog that I thought that the high made in May, and it was around May the 20th, was made on the back of very aggressive speculative levered trading in the Shanghai gold market. And by the way, at the same time, we were seeing that kind of levered speculative buying in silver and copper in the Shanghai market. And I thought that might have been a top, and we did back off at least $100 or $200 from those levels. But, we're back up here again. So, yes, it is still in a bull market, but I think maybe there's been some changes to who's buying. In other words, certainly one of the rationales earlier this year for why the price of gold was going up was that the various central banks were buying gold and reporting that they were buying gold, particularly Russia and China. And they seem to either they're not reporting that they're doing it or they're not. Whatever, you can never be sure whether or not you're getting the full story from those sources. I'm a little cautious here about being a buyer of gold. Yes, we're at high prices and that, but I'm a little cautious.
What happened to copper and uranium?
Well, copper began a run for the roses, I guess, around beginning of March, and we made our highs in middle or so of May, that week of May 20. And I've written in my blog that the week of May 20 saw sort of a speculative blowout in a number of markets, but not all. Certainly the Dow turned lower that week, but did come back and make new highs. The S&P and the NASDAQ made a bit of a turn and then stormed on to new highs in July. But other markets like copper and uranium made an important high that week. I think what happened is we had run up from about $3.80 or so on copper to $5.20 at the highs. And if I could use a colloquial term, everybody and his dog was aware of the electrification of everything story. They knew there was just not enough copper that could be found, let alone, go to all the trouble of digging it out of the ground or getting permits to do that and, blah, 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 blah. There was just this massive shortage of copper relative to anticipated demand. So prices started to run to the upside, and as they're running to the upside, people that maybe didn't know a damn thing about copper just bought it because it was going up. So we had this speculative run, and then it turned. And we have evidence, and I put it up on my website, that there was massive shipments of copper out of China at about that time, and it started to put pressure on the prices. In other words, you bought the stuff, you paid $5 for it, you feel pretty good about it. Well, here you go, you got yourself a pound of copper. Oh, well, I wasn't counting on that. I just wanted the profit. There's just been a fundamental shift there, I think, of the enthusiasm for the story. And I think copper was maybe a subset of the AI story, the artificial intelligence. You're going to have to build all of these places that are going to use so much copper, and you're going to have to enlarge the grid. And the idea that there was just going to be unlimited demand for copper, and you just couldn't get any, drove people to believe the stuff was just going to keep going up. And there's an old adage about, buy the rumor, sell the news. Well, we had that reversal in copper, and from me, with the cynical way that I look at market, the market just got way too enthusiastic. People didn't know what they were doing, paid too much, and then when the stuff started to fall down, they had to turn sellers. Now, I've talked about the massive short position in the yen and the Canadian dollar. It was the other way around in copper, massive long positions relative to norms. And we've seen here since May the 20th that the people that had been aggressively buying it have been selling it. And I think very much the same thing with uranium. Uranium, you go back 4 years or so, and uranium was really in the dumps after the run it had around 2011, 2012. And we had a great run off those levels. But, one of the benchmarks I look at is just the share price of Cameco. It's down 40% from its May highs. And, there was a similar kind of story out there, that there is going to be all these building of nuclear power generating plants, whether they're small ones or big ones or what have you, and they're going to need uranium, and there just isn't enough. Whether it's coming from here or there, or Kazakhstan or what have you. So people bought the story. And now, the story got a little old and prices started to go down, and people that maybe had bought it on leverage started to sell, and the selling added to more selling, and we back up. So that's that is the story of so many markets that make a run to the upside, whether it's .com stocks in 99 or any number of other stories that you could think of. And then as time goes by, people lose interest, or their attention goes elsewhere, or the facts change, and what do you do, and so on. And then prices fall from the levels that they hit when exuberance was irrational.
Over the past couple of years on the show, you've said you make money not because you have a great crystal ball, but because you're very good at managing risk. How did you apply that during the past couple of weeks?
Well, it's a fair question. Overall, what risk management to me means is capital preservation. And at the simplest level, that means just never, ever taking a big loss. Jimmy, I've told you I've been trading for all those years, and for most of those years, I was also a broker. And I saw a lot of people lose a lot of money. And when I would ask myself, what do they have in common? It was really obvious. People hate taking a loss. There'd be, I couldn't say how many times I would hear somebody say, in effect, well, let's give it a couple more days. I'm sure it's going to turn around. So now, as commodity traders in particular, we had a lot of metrics on hundreds of thousands of clients, and we could see And it turned out that, certainly in excess of 90% of retail clients in the commodity business lost money. And it was probably higher than that. So capital preservation, to me, is the fundamental of risk management. You want to be able to stick around so that you can still play the game. If you blow up your account, take a big loss, you're gone. You can't get it back. And so one of the ways that I manage risk is I trade small. I do not bet the farm ever. I try to pay attention to correlations between different things. In other words, if you got several different positions, they call it in your portfolio, you may think you have some diversification. Well, let's say your portfolio just consists of stocks, and you got some of this, got some of that, you got this and that, and you think you're correlated. When we come to a week like what we just had, it doesn't matter what you got; everything went down. So then, instead of maybe you're willing to take a 5% loss on each of these individual things, and figuring that all of them would never go against you at the same time, you could have a kind of a diversified portfolio and diversified in quotation marks that did a lot worse this week than you would have thought it did. So I am very sensitive to correlation. As I said earlier, I think all markets are correlated with each other to some degree, and at the sort of the big picture level, the correlation is: are you risk on or are you risk off? So I would say, and look at correlation. In last week's chart, last week's blog, I should say, I put up a 4-year chart that overlaid the price of gold with the price of the S&P, and they were remarkably correlated. In other words, if you owned the S&P and you bought some gold because you thought that was going to be like a hedge against being long the S&P, you're wrong. They're going to move the same. So I really pay a lot of attention to correlation, being aware that, just like with gold and the S&P, that you don't have diversification, you're just kind of doubling your position. I could go on, Jimmy, but that's kind of the essence of what I mean by managing risk. The other side of what you just said was, I don't have a crystal ball. And believe me, I don't. I do not make money trading because I know what's going to happen in the future. I have opinions like everybody else, and I try to keep a rein on those opinions, and sometimes I'm better at that than at others. But that's not what makes the money. Making the money means, to me, staying alive so that even if you stumble into a good trade, at least you're still there. If you might brag about why you got into the trade and what a brilliant guy you were and all that, but if you just don't have the money to trade anymore because you blew up on some trades that you just refused to take a loss when it was small, then you can't play anymore. So yes, I have no crystal ball, and yes, it's all about managing risk.
Victor, thank you so much for being on This Week in Money.
Jim's always fun talking with you. Thank you kindly.
My guest has been Victor Adair, his website, victoradair.ca. Coming up, Martin Armstrong, next on This Week in Money.
Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclico.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Martin Armstrong, founder of Armstrong Economics, available online at Armstrong.Economics.com. He's speaking to us from Florida. Marty, welcome back to This Week in Money.
Well, it's always a pleasure. How are you doing up there?
A bit of forest fire smoke, and it's to be expected, I guess, every summer now.
Pretty much.
The VIX spiked higher earlier this week as markets dropped. What caused this to happen?
A lot of this has to do with the Japanese carry trade. You had so many people, borrowing yen because it was lower interest and everything else. And as the yen went up, you had those on the carry trade had to get out, but you also had Japanese having to start sell overseas assets to cover losses back home. And what is not really being discussed here is that since March, we also have a trend whereby Japan has been selling off U.S. debt as China was during the first quarter, but Japan is doing it largely because they have a financial crisis going on. And of all the countries that are probably risking a sovereign default, as I've been saying for years, Japan is the most indebted, country, basically in the West. And it would probably be, that's where you're going to start seeing any sovereign real, default problems, moratoriums on interest or things of that nature. But that's why they've been, selling off U.S. debt to cover a lot of the losses on their own. So this has confused a lot of people because they just look at like the VIX or their local stock market. But we're in a situation again, like, we had a lot of people that were on the carry trade with the yen and a lot of these hedge funds and banks, etc. And, it's similar to what they were doing with Russia back in 1998. And when that collapsed, they needed money, so they started selling everything else, anything that they could elsewhere. So you ended up with a liquidity crisis. And so if you're just looking at the domestic, market and the fundamentals locally, and the market just moves in the opposite direction of all your local fundamentals, people get confused what's going on. But this is because we're in a international liquidity crisis. And this time it happens to be in Japan, where in 98 it was located in Russia. So you have foreign selling that has got nothing to do with domestic economic analysis or anything of that nature. So then you have people that don't understand what's going on coming out saying, the Federal Reserve should do an emergency cut. I've published things on that. They've never worked. The last emergency cut was in March of 2020 and the market still went down. I don't know. They just keep hanging on to these old theories all the time.
What do you see ahead for stock markets into 2025 and 26?
Short term, the markets are still kind of in a under pressure, largely because people are confused and are trying to figure out which way is this is going to go. And then you have a lot of these domestic analysts out there calling for the crash of the century, and they base these opinions based, really looking back on 1929, for example. And once more, they don't understand what they're really saying. They haven't done the research, and if you go back to 1929, the U.S. had a balanced budget. All right. And so when Keynes came up with his whole theory of lowering and raising interest rates back then, it did affect us, not the government. But now what you have is the government's the biggest borrower in the room in every country. So they raise interest rates to fight inflation, and guess what? The national debts just start exploding. And so the central banks honestly do not have the power anymore to do anything. And this is going to come I would say, more mainstream when people finally realize what's happening, and that may start in September. So initially, you've got markets that are going to be under pressure short term, and then afterwards, people are going to figure out that the problem is government side, not the private side, and then you basically should be dumping the government bonds and of state, local, federal, whatever, and moving to the private sector. So then you'll see the stock market begin to rise as a flight to quality away from government. Just in 1929, you sold the stocks and you went to government bonds because the government was okay. It wasn't the biggest borrower in the room. And so, this time it's just completely opposite of 29. So when these people are talking about the crash of the century and all this sort of stuff, you better use a little common sense. The crash of the century is basically going to be in the bond market, not in the stock market.
The U.S. dollar spiked lower earlier this week. Is the U.S. dollar likely to remain the go-to currency?
Yes, as you get war, and in all honesty, I mean, I've just gotten back from Europe, and I did speak with 3 governments over there, and everybody's just looking for war. 30 years ago, it was world peace, and now it's like world war. And it seems as though the real reason for this is that they are all in a financial crisis. And if they don't create an external enemy, then the people are going to be storming, government buildings with pitchforks because they're basically on the edge of default. So, I mean, just look at it this way. We are still paying interest on World War II debt because they never pay anything off. If you lend $1 trillion to Ukraine, very nice. It's going to cost you another $2 or $3 trillion in the next decade because they never pay anything. So this is what we're really facing here. And a lot of them are trying to use war as the excuse, the diversion. You saw it a little bit with Biden when inflation started ticking up and he said, oh, it's Putin's inflation, But, the inflation was set in motion by COVID. When you shut everybody down, I mean, I had effectively farmers sending me emails how they had to kill 30,000 chickens because there was no trucks that could take anybody to market. So this is, gross mismanagement on the part of governments. And they're all looking for war at this stage in the game. And largely this is what you're looking at. They need war at this stage really simply to as a diversion going on, and you also, they expect, if you look at what happens with defaults in war, all of Europe defaulted. You can go buy all their bonds on eBay. It's the great excuse to default on the debt. Even the United States, the Constitution said that they would honor the debt of the previous government, the continental currency. You can buy it all on eBay. They never paid. This is what happens. So they're looking at this war with Russia as the excuse to basically default. And I've heard a number of them saying that you even had Estonia coming out that Russia should be split up. Russia is the wealthiest country in the world from a natural resource perspective. Oil, gold, diamonds, platinum, they have everything there. So this is why Napoleon tried to invade, Hitler tried to invade. Everybody's always tried to grab a hold of Russia for that reason. And what I've heard is that they're going to do the same thing, and then, that will pay off all the national debts. And I've basically argued, I said, well, I don't care how much you get. You people always spend more than whatever you take in. And but this is where we're going. So the dollar will rise when you get into war in Europe, because the capital will flee to largely North America. just as it did for World War I and World War II. The U.S. was virtually bankrupt in 1896. It's when J.P. Morgan had to lend $100 million in gold to bail out the Treasury. And what made the United States the wealthiest country and the financial capital of the world was World War I and II. Without European war, the U.S. would still be an agrarian country. I mean, that's what really made things happen. And wars historically shift capital from wherever the event is taking place to someplace else. And that's why the financial capital of the world historically has always migrated. Went from Babylon to Athens, from Athens to Rome. I mean, it just goes on and on and on. This time, and we took it from Britain, and then we're going to hand it to China. China is already rebuilding its Silk Road, and it knows this is just their time.
Gold didn't seem to care what happened to the markets. Can you foresee a perfect storm where gold would ignite?
Yes, when you get into the situation where you're looking at the confidence in government collapsing, that's what makes gold go up. Okay, it's not inflation. I mean, inflation rose from 1980, and gold went down for 19 years. I mean, let's look at this realistically. Gold goes up when any time you get to a point you're questioning the survivability of the government or the confidence in government. Even if you go back to 1976, gold had fallen to $100. It finally reached $400 by December 1979, and then it went in the last 6 weeks from $400 to $875. Why? That's when Russia invaded Afghanistan. So war is what's going to make not just the stock market go up, but also gold. And that's what I've said many times, and just look at it. The two of them have risen together during periods of uncertainty internationally.
Could interest rates drop lower and then take off higher?
Pretty much. A lot of people were calling for the emergency cuts by the Fed. I published some charts. I mean, it doesn't matter. Interest rates have gone up in bull markets. I don't know whoever started this nonsense about, interest rates up, stocks down, etc. I mean, just look, you can Google it yourself. Look at the Fed rates. The Fed raised rates all the time through Trump's administration. And but the stock market went up. All right. They called it the Trump rally. When interest rates go down, they dropped from 6% to 1.5% in Great Depression. It didn't help the market. 2007, they dropped interest rates dramatically, even went to negative in Europe. It didn't help the market. All right. People basically, higher interest rates show a demand for money. All right. If the economy's doing well, interest rates will rise naturally because there is a bid for money. More people see an opportunity to invest in something, so they bid for it. And I warned the ECB, going negative it was stupid because people are not going to invest. I don't care what the level of interest rate is. And it's very simple to figure it out. If you think the stock market will double next year, you'll pay 20% interest. But if you don't think it's going to go up 1%, you're not going to even pay 1%. It's the difference between the perception of what you're expecting and what is the rate of interest. That's it. Simple as that. And that's why the stock market has never peaked with the same level of interest rates. We'll get one more, dip probably in the interest rate because the Fed will be under pressure to do so. But Powell came out last December and he criticized the Biden administration. And that's the first time that happened since 1951. The number one rule of central banks, you do not criticize the current administration. He did. And he came out and he said, the spending is unsustainable. He also knows you keep throwing all this money down the black hole in Ukraine, and interest rates rise. It was the Vietnam War that broke the gold standard. You fixed gold to $35, but you kept increasing the supply of money. I mean, a 3-year-old with a pocket calculator could have figured out the thing was going to go bust. I mean, we're in the same situation. Now, Powell is pretty smart. He may do a quarter, point cut in September, as things get a little bit heavier, but he knows you go into war and rates go up, not down.
It looks like the Canadian real estate market topped in early 2022. Sales at a multi-decade low for detached homes in the Greater Vancouver area. Prices are dropping. Vancouver, one of the biggest housing bubbles in the world, was created. How far do you think prices could drop in Bubble City?
Normally, you're looking at a 25 to about 33% decline on any kind of a correction. But again, eventually what will happen is that people will begin to see that real estate is at least a place to park money when you're looking away from problems with the government. And there are shifts around in the real estate market, so it's not one size fits all. Here in the United States, I can tell you I'm down in Florida, and I still get 3 calls a week. Do you want to sell your house? I said, no, thank you. Where am I going to go? Chicago? But you look at California, prices are dropping. New York, prices are dropping. People are trying to get away from the high-taxed areas, the cities that were the most draconian with COVID, and they're moving out to other areas. In the United States, we call it the flight from the blue states to the red states. So, I mean, Elon Musk even came out and said he's now moving everything out of California to Texas. I mean, these people don't get it. I mean, California is actually imposing an exit tax. I mean, the fact you're even, looking at that, instead, why don't you look at, why people are leaving? You're trying to punish people for leaving. Well, maybe you're doing something wrong, but they never look at it that way. We are always the problem, never those in government. And, unfortunately, that's what we're looking at. So in the case of Vancouver, yes, it's been a bubble there. You had a lot of people coming in from Asia, et cetera. So you need to, you'll catch up to some degree. And, people begin to look around, where are they going to go? And just look at where people are migrating to, and you'll see the real estate in those areas is tending to be supported and will then eventually go up. Even in the German hyperinflation that a lot of people, talk about, okay? When the government collapsed at that stage in the game and they came out with a new currency in 1925, it was backed by real estate. So you have farmland is still rising. All right, residential in major cities that have been draconian are declining. And, this is pretty much throughout North America.
Are Canada and the U.S. in or heading into recession, and how long could a recession last for in Canada and the U.S.?
Overall, we're looking at a recession into, it started from May of this year, and it will continue into 2028. But this is a more of a stagflation. We're not looking at like a depression type thing, but you're looking at shortages, rising taxes, things of this nature, which basically increase the cost. So the inflation side will be greater than the economic growth. The other thing that is helping to provide some support is the flight of capital from other places to North America, mainly because of war. So, and you're seeing this civil unrest just about everywhere. I mean, look at London and Britain overall, France. I mean, it's, everything is very, very polarized at this stage.
Do you think the 2024 election is in the process of being rigged?
Look, I had actually published before. I just know the playbook to these people. There's too much at stake. And both Trump and RFK are anti-war. And those that are in power, they need war. And Camilla is just another Biden. Not much different. She'll sign whatever they stick in front of her nose. The evidence of that is that they sent her to the Munich Security Council meeting. That is that's the Secretary of State's job. They sent her, and in all honesty, I don't know how she even passed law school, but then she stands up and she reads whatever they hand her on the card, and she says, "Oh, Ukraine should join NATO." You just wiped out 3 treaties. It's Blinken, who's the Secretary of State, wouldn't dare make such a statement because it basically nullifies 3 major treaties since 1991. And you need an idiot to say something like that. And that's why they want her, because she's just another Biden. And so what's going to happen is, the assassination attempt on Trump was clearly, I think, set up. Unbelievable that the Secret Service SWAT teams were denied him for 2 years. 2 years. And suddenly they showed up at that one. But they didn't shoot until the other guy shot. I don't see how they can possibly tolerate Trump. And unfortunately, our computer is showing we're looking at civil unrest, kind of what you're seeing in London and throughout Europe, in France, and you're seeing it in Britain. It's just getting out of hand. I think it kind of began with Hillary, where she just said anybody that didn't vote for her was a deplorable. You can't insult 50% of the population. Even Jamie Dimon was at Davos, and he said, "I've been a Democrat, but I'm warning you, you cannot insult half the other half of the country." And that's what it's been coming down to. It's just name calling, and so I don't care who wins. We're looking at serious civil unrest in the United States going into January next year. Nobody's going to accept this election. And our computer's been warning this may be the very last one. Civilization is based upon everybody benefits. And this, what's happened in I would say over particularly the last 10 years in particular, it's just gotten really nasty. And this is not what civilization's about. This is why countries are going to split up. You'll split up, East versus West. We'll split up at least into 3 regions. Everybody's supposed to benefit. It's not that, okay, now I'm in power, I get to punish the other side. That's not what this is about. Who wants to live in that kind of a society? You even take the abortion issue. Fine, well, the middle of, they call it the Bible Belt in the middle of the country. It's a religious thing to them. You insult them like that, and, this is it. This isn't the way you run a country. Civilization, everybody's supposed to, we all cooperate, we get along. And if you look at what's happened before 2016, every election, okay, fine, Obama won, whatever, and everybody moved on. We didn't start calling each other names and this is nasty and whatever. And when you start getting into this, it's crazy. In Britain, you've got Stammer saying, "Oh, we're going to go get those non-doms and tax them." They're there because they're not taxed on worldwide income. You impose that, you idiot. They will leave. They leave, and then guess what? All the money that they spend in London, it's not going to be there. You're going to see shops closing. Run the governments properly. But this is not what they do. It's like they always want to just run things inefficiently, and they always blame the people. And unfortunately, this is what historically, what breaks things up. I mean, even Rome in the 3rd century broke up into 3 parts. We're in a situation where, I mean, I was over in Germany and down in Bavaria, and they said, "Oh, today's a holiday." I said, "Which holiday is this?" And they said, "Oh, we're celebrating the winning of the war." I said, "Which war was this?" "Oh, defeating Prussia, because Bavaria is Catholic, the North is Protestant." Same thing as what you see in Ireland. You go to Britain, and they still call Catholics papes, and that was from the Civil War in the 1600s. So every old resentment seems to be percolating up, again. Ukraine is just hopeless. I can tell you, we had 2 employees, one in Kiev and one in Donetsk, and neither one would talk to each other. And you could never bring a bottle of Russian vodka to dinner. In Kiev, it was regarded as an insult. When you get into this, I don't know, they create hate crimes for everything else. But these are hate crimes at governmental level. You had Lindsey Graham, a video of him with Zelensky saying this is the best money we ever spent killing Russians. I mean, if you said that on the street about somebody down the block, I mean, they'd lock you up. So they get to do all the hate crimes from the political, bully pulpit.
The Democrats have gone very far left and into crazy world. How do you think the old school Democrats will vote in 2024?
It looks like a lot of them are going to flip the other way, particularly this VP that Camilla picked. He was extremely draconian on COVID. And, he's even been out there saying, gee, if there's civil unrest, we should just lock everybody down like we did with COVID. I mean, this is dictatorial stuff. This is not democracy. But again, it's more of a, what has happened in politics is that this is my turn and now I get to punish you. And I'm sorry, civilizations are not, they cannot survive when they're divided like that. And I mean, even Abraham Lincoln said that. He said a country divided cannot stand.
Do you think the U.S. and Canada could see riots like the ones happening in the U.K.?
Yes, I think that's going to be the aftermath of the 2024 election in the States. But I mean, I know a lot of Ukrainians, and I haven't met a single one that's so far has anything nice to say about Trudeau. And I was asked in a meeting over there who would I sit down with and have a drink with as far as heads of state, and I said, there is nobody anymore. I mean, I could used to have intelligent conversations with Reagan or Margaret Thatcher. She was, brilliant. There's nobody there in any government that you could have an honest conversation with anymore. Most of them, you got to bring a bib to wipe the drool from their mouth. I mean, even in Europe, it's the same thing everywhere. You have Macron in France saying, "Oh, we're going to send troops into Ukraine." That's World War III. Do you understand what you're saying? I don't know. What are you going to say? We've got the worst crop of world leaders, I think, in my entire lifetime. I've never seen, there's nobody that I didn't even want to shake hands with anymore.
In April this year, Canada's Parliament was rocked by allegations of treason that seems to have been brushed under the carpet. It seems everywhere you turn in Canada, the U.S., treason's being committed, but nobody seems to care. Isn't treason a serious crime with serious penalties?
Yes, that's what I'm talking about, that politics is degenerated to such a degree. This is not what civilization's about. This is why republics tend to be the most corrupt form of government historically. The people, they don't really represent the common folk out there. They get there and it's all like about me. What do I get out of this? Instead of, going to a hotel room and just taking the soap out of the extra soap out of there, they take the damn bed too. It's just getting to be untenable. I mean, and it's not just in Canada, it's the United States, it's Britain, absolutely everywhere you go. We've got, offices around the world, and I hear the same thing from everybody. The issue may change, but nobody seems to be satisfied with their government anywhere. I was just on Australian TV down there, and I was shocked. I mean, they were, out for blood against their prime minister. I mean, nowhere is anybody happy with government, ever.
There are rumors that Canada is actually being run by China or Klaus Schwab in the World Economic Forum. Who do you think really runs Canada?
It's Klaus, not China. I know Klaus. The guy that did the movie on me, the forecaster, did the movie on him. All right. And even he was shocked. But, Klaus is an academic, and he's a control freak. All right. So what you're looking at is he just has these theories, and this is it. And he's merged in there with George Soros, and you could read the guy that influenced him was an academic Popper. And they have no concept of humanity or culture or anything. They just think that they're behind all this migrant crisis, and that's what's going on. I mean, over 10 million of them have entered Britain, and you're going to see civil war. I talked to people over there, and one woman said that she had to take her child out of school because she was the only Christian kid there, and the others start picking on her. This is. I have a friend in Germany. His daughter's 13 years old, and he will not even allow her to walk to the bus stop, which is 3 blocks away. You can't bring people in from third world countries that have no respect for culture. They expect to come with their own. They're not here to assimilate. If you look in Sweden, they've hung signs up, Shira law here. Police are afraid to go into some of those areas. They're not here like the Europeans came to North America and absorbed the culture, and they're here to no, we're just here for the free money, but we're going to continue to run everything the way we believe. And that's tearing the countries apart. So you're looking at major civil unrest, and this is an idea that has been funded by Soros, and it comes out of the World Economic Forum. And, Klaus has been very, proud of the fact that he's even said we've infiltrated all the cabinets around the world to implement his ideas. And they just pay him. And that's why I say republics are the most corrupt form of government, because everybody's for sale.
Is civil war avoidable? But if we do see civil war, will it be mainly in the big cities?
I would definitely, we're going to split. There's no question about it. And I'm in Florida, and California now looks like a foreign country to me. It's completely different. 180 degrees out of whatever it was before. And will it turn into a conflict in the sense of one army against another? That's possible. That is historically what happened in Rome. You had generals splitting and one against the other, etc. So this idea of that, I've argued against it, that promotes, the UN should be this one world government. And I put a tape even on our site of the former president of Holland, of France, standing in the European Parliament with Merkel, saying the whole purpose of the EU was one government for Europe to eliminate war. And I've argued, you don't know your history. Rome was one government. How many civil wars did they have? When you change culture, you get division. Simple as that. And Rome lasted for 1,000 years. Why? Because they did not impose their culture upon everybody. All right? The Christians thought, look at they're pagans, all these gods, because they didn't go in and say, now you have to respect our God. They let everybody keep their own culture. They didn't necessarily worship the gods of every one of these countries, but, that's just simply the way it was. And then somebody in France could say, gee, I can make some pots and sell it to somebody in Syria. So it was beneficial to be part of it. There wasn't, tariffs and taxes and trade agreements, and it was an open market. That's why Rome lasted. And we've just rejected everything about that. We put in trade restrictions and all this theory about, if our currency's cheaper, we can sell more to somebody else. They're always trying to manipulate everything, and they don't understand what makes it work. That's our real problem.
Does the deep state swamp want World War III, and how can it be prevented?
I would say, I was trying to get RFK to join with Trump and become the Attorney General. The Attorney General, in my opinion, is more powerful than the President. He could have indicted Pfizer, but, egos get involved, etc. But, at least the two of them were anti-war. Everybody else is pro-war. If you put the two of them in there, then maybe you could actually prevent it, or at least reduce the volatility. But my fear is that they're going to start something before either the election, maybe in September, or they're going to start it before January, so that if Trump does get in, they're going to try and trap him so he can't get out of it. But I've already seen the proposals. They're planning to draft girls. It's crazy. In Germany, they've called up 900,000 reservists. Our staff over there, one of their friends, is 59 years old, as they've been told to report. Drafting in Europe is going up to 60 years old. So I think we should pay attention to this, because if you think, well, I'm 45, I'm at 18, sorry, you're still eligible.
Do you think politicians at all levels of government will ever pay for their crimes?
No, because they're largely the ones that end up having to, you can't prosecute somebody unless you are the government, and the government's never going to prosecute itself. The Romans had the tribune of the people. Nobody could touch him. He could indict anybody in government. We created something similar, the Inspector General, but stuck it under the Department of Justice, and they have no discretion to bring charges against anybody in government. They need to be segregated off and have the power as the old Roman tribune did, and then they could indict whoever. But otherwise, government will never, ever clean itself up. It's self-interest. I just had, dinner with a local politician and, saying everything I write about federal, it's the same thing there. Self-interest, whatever, they're kind of really disgusted at the whole thing. And this is just at the county level, not even at the state level yet. It always ends up being the same, no matter what level of government you're looking at. It's about power.
Trump mentioned using Bitcoin to get rid of the debt. How would that work?
I don't think he understands that. And there's no possible way that would be able to do that. First of all, you have to have the only way to get rid of this debt. And I've submitted the proposals for him. I did a conference on it back in 2015. You can probably get the DVD off of Amazon or our site, called the Solution Conference. And basically, what you do is you issue coupons to replace the debt. The coupon is only available. You take it to the broker, and you can use it to buy domestic stock or corporate bonds. not international, but, restricted domestically. And then you retire the debt that way, and governments are prevented from borrowing. But trust me, I pitched it, and they prefer Schwab's way better because they get to retain power. They don't know how to run for office anymore. This is what socialism has done. The real downside of it is that they can't run for office without saying, vote for me and I'll give you this. That's what it's all about. So we're in this debt crisis. I don't see how it could possibly be resolved. It's going to have to, pop as a bubble, and then people are going to see that the one thing you do not trust is government. And so they will run to gold and stocks and any real estate even. I mean, anything in the private sector is the only place to survive the sovereign defaults that we're going to end up with. Because historically, when does the bubble burst? Governments get into these Ponzi schemes. And what it always takes place is they sell the new debt to pay off the old. And it all comes crashing down when they try to sell the new debt and there is no bid. Now, China just dumped $53 billion of U.S. debt the first quarter. Janet Yellen jumped on a plane, go over there, buy her debt, blah, 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 whatever. You have Blinken, the head of the State Department, a real nasty neocon, and he's out there threatening world war on every front. You go into Taiwan and we're going to come in and whatever. So China then says, excuse me, we should buy $100 billion worth of your debt so you can buy missiles to shoot us? I don't think so. So you're seeing China, selling off debt. Japan, since March, is starting to sell off debt because they need it for another reason. But when you cannot sell the new debt, that's when it all comes to a head. And as soon as that could happen, is maybe you might start to see it the first or second week of September. But we're getting close to this threshold, and those in government will not reform. They think this is just going to keep going. And I've spoke to them. I said, look, this is not going to, eventually this comes to an end. And all they've said back, you don't understand. I said, what don't I understand? We're the government. We're different. I said, that's what I'm talking about. What can I say? I mean, they will not reform. They will go bust, as every other government has throughout history, and they're all buried in a common grave.
Are digital ID, central bank digital currencies, 15-minute cities, and C40 cities marching forward?
This is all, Klaus Schwab's agenda. Most of them are viewing that the economy is 35% untaxed. That's the underground economy. I've heard this from North America as well as Europe. So they want to eliminate paper money. Your government eliminated the high denomination notes already. All right. And they believe that if they force everybody into digital currency, they will collect 35% more in taxes. As I said, you hire that 16-year-old girl next door to watch the kids while you and your wife go out to dinner, and guess what? You gave her $50, and from their perspective, oh my God, she didn't pay taxes. That's their problem. That 16-year-old girl is bringing down the whole system. This is the way they look at it. So if they eliminate cash, and it has to be digital, then they'll be able to get their 50%. I've told them, I don't care what you do, how much you collect, you will still always spend more because you have never paid off the debt. And you have no intention of paying off the debt. So, that's it. I mean, and what most people are not aware of is the IMF has already created their digital currency. And it's not getting a lot of publicity, but what they intend to do is they think that with war, the United Nations can emerge as the peacekeeper of the world. And they'll be the peacemaker, and then that will elevate them to this one world government. And when they do that, the IMF will replace the dollar with their coin, and the sales pitch is that because the U.S. put sanctions on Russia, then that was a warning sign to everybody else that they could do the same to you. So that's why you have these bricks forming. It's got nothing to do with the dollar's not backed or gold or anything else, because no currency is backed. All right, this is a geopolitical situation. So China's the same thing. They're creating their chip system. Iran's doing the same thing. So you've split the world economy in half. And the idea of the IMF, the real criticism against the dollar has been that they have to use the dollar, the currency of their adversary. That's China and Russia's view. So the IMF, to satisfy that, everybody come back together again, and we'll use the IMF digital coin, not that of the United States. And that's the scheme that they're planning for the next few years.
Is the unelected EU government a template for one world government?
Yes. That is if you look at what they created, and it was to basically eliminate democracy. They do not like democracy. You can also look on my site, Google, FT populism. The Financial Times of London did a video at Davos in 2016 when Trump was elected. That's when they were all upset, okay? And because that's when democracy suddenly became populism. And they realized, gee, the people could actually vote us out of power. And so from that moment on, they really have done everything they can to eliminate this evil populism. And if you look at the structure of the EU, the head of the EU doesn't stand for election, and nobody in the EU Commission stands for election. And these are where the laws are made. All right, people have zero say in this. The head of state over there is appointed by the heads of all the other states. There is nobody that stands for election. That's what they want. They don't want to have to, kowtow to anybody. And this is their dream. They hate democracy. They see it as evil, and they just switch the name. It's populism. And we have to eliminate populism, which is really democracy and your right to vote.
Are we headed for famine by design?
Yes, unfortunately. I can't believe that they are this stupid using this climate change nonsense. Climate has always changed, but going after fertilizer and all of this to reduce the food supply, when we should be worried that, you get just, a couple of major volcanic eruptions in the 7 category. I mean, you can go, get a book, The Year Without a Summer, 1816. 2 volcanoes blew up, and it created a volcanic winter. It was snowing in New York City in July. Same thing when there was a major volcanic eruption in back in the Byzantine Empire. Killed nearly 50% of the population. And historians back then said we didn't see the sun for weeks. Crops can't grow. This is what happens. Why is Bill Gates suddenly, the largest landholder, farmland holder in the United States, when he has professed, as his father, that we have to reduce the population? I don't know. It seems to be doing things that are to reduce the population and, avoiding responsibility for it.
Are Canada and the U.S. still on course to break up into smaller countries?
Yes, I think it's inevitable. You'll break up East versus West. We'll break up at least into 3 sections, maybe the South and Midwest together, Northeast, its own little fiefdom, and the West Coast from Oregon, Washington, California. I mean, they're just in Neverland. So, I mean, that's what Elon Musk was moving. He says that was the final straw. You had the head of the governor of California came out and passing a law that the school is not supposed to tell the parent that the child wants to get a gender change. I mean, they've usurped, to me, that is just the same thing as Stalin from communism. The kids were taught your real parent is the state, not your biological parents. And if they ever say anything against the state, be a good citizen and report them to your real parent, the state. And that's what we're seeing. It's shocking. It really is shocking that they're interfering in parental rights.
Was the Olympics opening ceremony filled with symbolism showcasing what the one world order proponents want to push on people?
Pretty much. I think the whole pushing of the transgender and the gay rights thing is to reduce population. I don't think anybody really, most people had never even heard of what a transgender was. So, there was really no discrimination. I mean, we have offices in Thailand and they're all over the place. But the difference is that, they don't call themselves women. They call themselves a ladyboy. Over here, it's, you just had, I think it was New Hampshire or Maine, just passed a law to outlaw the terms mother and father. Because, it's offensive to somebody else. I mean, I'm sorry. I'm not going to call my mother a birthing machine. That's offensive to me. But my rights no longer matter. I mean, when you start doing this kind of crazy stuff, fine. We all have human rights. All right? We don't discriminate against them. Fine. But you also don't discriminate against me. Me calling my mother offend you? I'm sorry. Get out of here. I don't know what else to say, but, this is part of dividing the country, and you turning people against each other. And honestly, I just had dinner with somebody who's had a son and was sold this agenda and, went through this transition phase and was sold to him from middle school. Just look at the stats. A lot of the people that end up doing that at such young ages commit suicide and later on in life they regret what they did. I mean, I don't know. I believe this is all part and parcel of the same idea of just reducing population.
Would Canada and the U.S. be better off without central banks?
No, you do need central banks. A lot of people keep blaming the central bank, but honestly, the bulk of the money is created by the Treasury and debt. Theories have changed. That's the problem. Before 1971, if you had $100 government bond, and you went down to the bank and you said, okay, fine, would you lend me $25 on it? The answer was no. It's illegal. Okay. After 71 in the fall of Bretton Woods, it changed. So if you went trade gold futures or whatever, you can buy T-bills and post that as collateral. It was illegal before. All right. So because you could not borrow, against the debt, that's why we have these debts. Oh, it's less inflationary to borrow than to print. Because in theory, you're taking money out of the system. But once the debt became collateral and you can trade on it, sorry, it's just cash that pays interest now. And I would be very, very concerned if, I think, I know a lot of people blame the central banks, et cetera, and they're blaming the wrong person, really. I mean, you eliminate the central banks, and there is a proposal that someone submitted in the Congress to terminate the Fed. Then you want somebody like Janet Yellen deciding that how much money she's going to create. I mean, this is the woman that wanted to bring IRS, pushing that IRS audits of $600 transactions on eBay to get the rich. I don't think Elon Musk is selling a used bike on eBay for $600. So, I mean, just be a little bit more mindful of this. The central banks are more independent, and they certainly are more responsible than any of the politicians you would have in the Treasury.
The evil people running the world are on full display. Will it take military intervention to put an end to this push for one world government?
I think that their whole theories behind it are just going to collapse in their face. Much of what we're talking about, the people don't respect religions and cultures and things of this nature, and you can't just force everybody into this. I mean, just look at what they're doing in Ukraine. All right. Zelensky stands up, and to make sure he keeps this civil war going, what's it about? He tells them, you can no longer report, your churches can no longer be, report to Moscow. He sets up his patriarch in Kiev, and he's now like the new pope. All right. He then outlaws their Orthodox Christmas. No, you're going to celebrate it December 25th. He outlaws their religion, outlaws their language. And, I think in France, if you tried outlawing French, I think you're going to have a civil war. If the United States tried to say that, okay, fine, nobody's allowed to speak Spanish, I think you're going to have a civil war here too. You can't do these kind of things. They're deliberate actions to create unrest. This is not the way you run, a society at all.
Electric vehicle sales missed projections, but sales continue to increase. Would you consider getting an electric vehicle?
No, I do have an a BMW i8, and it's a hybrid, gas and electric. That's great because I've never even had to plug it in once. You drive and it charges up the electric side, but my next door neighbor has two Teslas, and I joke with him. I said, well, if a hurricane's coming, I can fit your wife and your daughter in my car. I can tie you to the roof, because you're not going to get more than 200 miles. They're not practical, and a lot of people are beginning to see that. I've clients in Norway, they did all these buses, electric, and it got so cold they don't work in real cold temperatures. So it's just another one of these fake dreams that people said, oh, that sounds good, but nobody's ever tested it. And that's why people aren't buying them.
Where can our listeners follow you?
Our site is Armstrong.Economics.com. It's an open site, so you don't have to register. We don't sell advertising. We try to keep it open for, as a public service. So no advertising. You don't have to give up your name or your firstborn child to get in. You don't have to keep clicking off things just to see what's there. So it's open, and we try to keep it that way as a public service.
Martin, thank you so much for chatting with us.
Well, thank you for inviting me, and take care up there.
My guest has been Martin Armstrong, founder of Armstrong Economics, available online at Armstrong.Economics.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Victor Adair, and Martin Armstrong. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@housestreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allen.